Hi, welcome to another episode where we analyze what the market is trying to do. Realize I used the word try. We can never know whether the market is going to go up or it's going to go down. We can only use possibility to help us make investment decision. If you're ready, over to you, Strongerhead.
Hey, thanks, Jason. The market has been up, and previously, when we talk about in episode 6, where I kind of call for the market bottom, a lot of people scolded me, say I'm being irresponsible. And in episode 17, I kind of mentioned that the market can go up very fast and furious, so get ready that this is going to be a vicious recovery. Whoa, I got so many people scolding me. And right now, take a look at the most current news. They say that we have seen the lows of the March for the stock market, and a man says that he's going to be calling for Dow Jones to be hitting 20,000 points. And this is the kind of low that we will never see again in our lifetime. Wow, that's quite bullish, huh? Okay. However, understand that the market don't go up in a straight line. So today, we're going to be sharing with you how do you study the market to understand whether is it going to go up or is it going to go down in the near term. So if you're interested, please stay tuned. This particular approach that I'm about to share with you, okay, it's only for people who believe in these 2 points. So take note. Number one, if you believe that you will never go against the market trend because the trend is your friend. And if you go against it, you probably will always be losing out a lot. So the market doesn't behave in a rational manner. I understand that. A lot of people say that the market is supposed to come down, it's supposed to crash like hell. However, always remember that the trend is your friend. Never go against the trend. The market is never efficient, okay? The market never follow the economy because the market is not economy. Yeah, and the second thing is this, we will study the momentum to understand the market psychology because, right, the market will be driven by the fear and the greed of the sentiment, right, among the traders. So you need to understand how to study the momentum, which is why, right, you have to go beyond just the fundamental. Because if you just stick to the fundamental, yes, I agree with you that the fundamental says that the market is supposed to go down. But then, right, why is it up? You see, why is it up? So it is easier, not really easier, like it's just my style, okay? I prefer to look at the momentum and study the momentum to understand whether the market will go up or go down in the near term. So in order to use this approach, you will always have to look at the time frame in 2 different time zones. The first one is the longer time frame. The second one will be a shorter time frame. Now, when we look at the longer time frame, we are looking at the longer time frame to understand, right, overall, is it the market trend is up or down? Because the longer time frame will tell you the trend in a more accurate fashion. The shorter time frame will just tell you whether in the short run, whether the market is going to go up and go down. So if you believe that the overall market is going up, then we look at the shorter time frame to see when is it pulling back. So when it is pulling back, we will be able to quickly buy in and ride the wave up again. Okay. If you believe that overall the market is going to come down, so in the short term, anything that is rallying, we believe is going to be a bear trap. Okay, so that is how we look at the market. I don't know whether is it too technical for you. Okay, so let's jump in. Now, I always look at the Dow Jones first. When we look at the Dow Jones, the reason is this. Dow Jones is the overall sentiment of the top 30 stocks. You can also look at the S&P 500 because it will gather the total 500 strong stock and use it as a representation of the overall stock market movement. So I always look at the Dow Jones first. And when I look at the Dow Jones, overall, can you see Dow Jones? Can you see Dow Jones is up. Can you see? Although, look at the steep, look at the angle. It has been going up furiously, but then lately has been pausing. So right now, overall, it's still up. And has it been overheated yet? It's not yet. If you look at RSI, it's a way to measure whether is the market overheat or not overheat. So right now, if it is at the top, means it's very overheat. Okay, so over here, it is in the middle. So in the middle, it's not really overheat yet. Yeah. Therefore, there's still more way or more legs to go up if the market wants to go up. Yeah. And let's take a look at the shorter term. Now, the shorter term, the market is quite heated already. If you look at it, right? Okay, previously, okay, at this zone, the market is going to be heated up. So it is very near already. It's near already. Yeah. So that means at this point, there's a chance that the market may pull pull back how much? We don't know, but there's a chance that the market will pull back lah. Okay. Oh, I accidentally moved the camera, so let me move it back. Okay, so so that will be the shorter term. Now, when you look at the overall index, unless you are buying the index, if not the market, if you want to do better than the market, or if you are looking for other opportunity, you have to look at the individual stocks that you're looking at. Okay, so let me share with you today how I'm going to do it. Now, Exxon. If you look at Exxon longer time frame versus the Dow, can you see the Dow is doing better than Exxon? That means if you buy Exxon when the market is up, which the market is up already, then you may not make as much as the overall market. That means you're probably doing worse off than the overall market. Okay, because if you look at the recovery, the market is going up more aggressively compared to Exxon. Okay, so that's why I prefer stocks, right, that mirror the market or do better than the market. Okay, if you do better than the market, probably I want to go in. Yeah, so that is how you look for stocks. So if you're in Exxon, now Exxon I don't recommend. It's just really for demonstration and entertainment purpose only. I'm not a professional over here. So if you want to buy anything, please do your own homework or look for your financial advisor, okay? Because I'm not licensed. So after you look at Exxon, now Exxon is up, overall up, just that it's not up as aggressive as the overall market, but it's still up. And let's take a look at the shorter term of Exxon. So shorter term of Exxon, okay, Exxon, it's not really, it's overheating soon, okay, and so at this point it's overheating soon, but if you look at the overall chart, right, there will be a resistance level at about maybe $50 over here, okay, so, and it's already overheating soon, so therefore you can see that in the short term there will be a pullback. It will pull back, very high chance. Okay, now let's take a look at Johnson & Johnson. Now Johnson & Johnson, see, ooh, overall is doing better. See, the market rate only recover about 50%. Johnson & Johnson, right, not only recover, but boom, went back to higher than the previous high. Can you see that? Okay, so this is considered Johnson is doing better than the overall market. So if you are in Johnson, probably you're making more than the market on average. Yeah. And let's take a look at short term. Now the short term, I would say, see, this is the resistance level. That means that about $150 is considered a resistance zone. There's a chance that there will be a lot of people who will profit take, or there will be some people who will short the market here. But for Johnson, right, at this very point, if it goes up here, there will be a resistance, but it's not really overcooked yet. That means it's not really overheated yet. So I believe that for the Johnson to go up to this level, right, high chance. Okay, so that's how I use the chart to study the market. Then let's take a look at Tesla. So Tesla overall, can you see the market recover 50%? They already recover almost back to the high. Okay, so overall it's still up. So when the market overall trend is up, never go against the trend. So you can only long, cannot short. But when are you going to buy? So let's take a look at the short term to see. Now take a look at the short term. Okay, this is where it's overheated. Right now, the price is near its last high. And it is not even, it is just about 6, it's not overheated yet. Okay, if you look at RSI, that means, right, there's a high chance Tesla probably will go back to its original high. Okay, very high chance. Yeah, so that is how you look at the chart to understand. Let's do one more. Are you interested? Okay, so let's take a look at NASDAQ. Some people ask me, what about tech stock? Okay, why don't I look at NASDAQ? Now, if you're studying tech stock, you have to look at NASDAQ rather than Dow Jones, because NASDAQ will be an overall index of for tech stock. So if you look at the index for NASDAQ, then it's easier for you to understand how is tech stock doing compared to the overall technological stock. Okay, so if you look at technological stock versus Dow Jones, technological stock is doing better than the overall the general stocks. Correct? Okay, you can see, right? Okay, so it's going up more, already recovered more than 50%. And let's take a look at maybe short term, right? So in the short term, you can see that the NASDAQ, it's near overheat level already, and it's really near resistance. So I expect it to have a slight pullback in the short term. And let's take a look at Amazon. A lot of people love Amazon. So Amazon is doing better than the overall NASDAQ. So if you bought into Amazon, you probably profit more than the NASDAQ on average. And Amazon is definitely on the uptrend. Okay. So if you look at the short term, now short term, this is the overcooked level. This is, so NASDAQ right now is over here. It's not overcooked, and the price is over here. So for when the index reach this level, that means probably Amazon is going to hit previous high or break new high. Yeah, this is short term. This is what I see lah. Okay. Then let's take a look at Alphabet. Now Alphabet is doing slightly below Nasdaq. Okay, that means about the same lah, but it's slightly just trading performance in terms of overall Nasdaq. Okay, so then in the short term, let's take a look. Short term, it's overcooked already. Okay, it's maybe go up a little bit more, it will be a pullback, slight pullback. You can see a resistance level over here, then a slight pullback, and before you go back up again. Okay, so that means, right, for people who believe in Google long term is up, short term there will be a pullback. So this pullback can be a chance for you to buy some more, okay, or buy. All right, so I hope everyone is happy and everyone like it. So if you like, please give me a thumbs up, and you can, if you want me to share with you, right, where do I get all these charts, please let me know. I will be able to create a video and share with you how do I get all these charts and all these diagram, right? Okay, from the internet, all free one. And if you have a ticker symbol that you would like me to take a look and you want to hear from my opinion, you can comment on my comment box and share me the ticker symbol. As long as I can find a ticker symbol, I probably will do a video for you on just that. Okay, hopefully you have a good week ahead, and remember to invest safe. This is Jason Strongerhead signing off. Bye bye.